You've been researching this for months, and the person who skipped all of it, opened a random index fund, wrong timing, didn't read the fees, is ahead of you right now. Investor behavior data from firms like Vanguard and Dalbar points to a consistent pattern. Higher financial literacy correlates with longer delays before market entry, not shorter ones. More knowledge, less action. You have a reason for the delay. You understand sequence of returns risk. You know expense ratios matter. You've read what happens when people rush into the wrong allocation, and you are not going to be that person. That sounds like wisdom, but here is the crack. The people who rushed in and lost money, they recovered. The money that never entered the market didn't recover from anything, it just didn't grow. The research wasn't protecting your money, it was occupying the space where your money should have been. This is default bias. When a decision space expands, more platforms, more strategies, more contradicting data, the brain doesn't sharpen, it retreats. Every new option is a new way to be wrong. When the number of failure modes crosses a threshold, the brain stops choosing. It selects nothing because nothing has zero downside. At some point, it just feels easier to close the tab. Monday, you open Vanguard. Looks solid. Tuesday, an article says timing matters more than people admit. Wednesday, a thread contradicts both. Wednesday night, you close all 3 tabs. That loop ran last week. It may have run this morning. 6 months of not acting doesn't stay filed as delay. The brain reorganizes it into identity, into I'm the person who invests carefully, into I don't rush into things. That identity now feels earned. It feels like character. And here is where it becomes a trap. Acting now doesn't just feel financially risky, it feels like a betrayal of who you spent 6 months becoming. Every article you read after this point isn't building your knowledge, it's reinforcing the architecture that keeps you out. This only breaks in 2 moments. Before the loop loads, right now, before you open the next tab, one recurring transfer, one amount. Next week, not the right amount, an amount. The transfer existing is the point, and when the account is no longer empty, Dalbar's data suggests a single initial action substantially raises the probability of a second one. One transaction changes your category from person who researches to person who invests. The goal of the first transaction is not the return, it is who you become after it. There is one point where this mechanism loses its grip, not when you know enough, when something has actually happened. That person who skipped the research and opened the random fund, they didn't know more than you, they just stopped waiting for the version of themselves that was finally ready. Default bias didn't stop you from investing, it convinced you that the research was the investing. Be honest, are you still researching or are you already investing? Tell me in the comments.